Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Wishing you a happy, healthy little start to your Saturday morning. Coming to you from a bright and beautiful Westlake Village, California. Again, I wanted to record a video right now because, right now we just had a confirmed bear trap on Bitcoin's price action. I'll pull that up. Instead of synthetics, another position I was taking a look at. Synthetics has been on the move here, but we did have a bit of a confirmed bear trap, and I really want to talk about what this means for the next few weeks to come. So first things first, we want to take a look at our underlying market dynamics. And why is that? Well, and by the way, really excited. We're going to be launching a new updated version of the Bitcoin Advisors website, hopefully by the end of the week. Additionally, the mobile app will be updated by the end of the month. So we're looking at incorporating all this quant data right into the mobile app, so you have it at your fingertips and you won't have to go on to cryptoquant.com and click on all the buttons. Anyways, taking a look at open interest here in the background here, we took a massive leg up. And what does open interest represent? It represents all the leveraged positions on the board. Okay, yet again, this is one of the key reasons why I was saying, look, Bitcoin is very, very likely to give a try higher before taking a major leg lower. And I'll say potentially lower, not today or tomorrow, but really there will be a setup for Bitcoin to go potentially lower in the next couple of weeks, which I do think will be presenting itself towards the end of this month. But right now, this is exactly what you want to see. As open interest goes up, Bitcoin price go up. And we had a massive leg up in the last 24 hours. We went up from 10.2 billion to 11.5 billion. So that's over $1.25 billion from yesterday. And that is significant. And this move I want to keep an eye on, because if Bitcoin does get specifically above, open interest above 13 to 14 billion, and in this move, I mean, and if Bitcoin does, and if Bitcoin does show some sort of weakness around 44,000 on the daily time frame here, call it 44 to 45,000. If we put in a lower high somewhere right around here, that would be rather concerning. But until that does happen, this is just a potential scenario here. We're talking about 44 to 45,000, another lower high. Again, keep in mind, open interest above 13 to 14 billion, and Bitcoin putting in a lower high around 44 to 45,000, rather concerning. And it's just something to be aware of right now. Because right now the path of least resistance is going to be to the upside. Also, I wanted to check in on our fear and greed index, which is currently at a 33, and we are still in the fearful zone. And the fear and greed index is coming in from a very low level, which is still showing support for continuation on this rally. Essentially, we've been talking about this for some time, right? We've been saying that, look, we want to be in the extremely fearful zone for 30 to 60 days. And, well, what do you know? We've been down here for almost exactly 60 days. In fact, if you go back and look at Bitcoin's December dump was on December 4th, or call it December 5th right there. Today is February 5th. We're exactly 2 months from the breakdown. What do you know? Very, very interesting if you ask me. What else do we want to take a look at is those funding rates and the leverage ratio. So the leverage ratio is still at all-time highs, saying a big move sure to come, and the funding rates are slightly negative. Which, what does that mean? Negative funding rates. So, global funding rates are negative. That's concerning if you're holding shorts. Not really concerning right now. It's because this is inconsequential. But if Bitcoin does want to rally about $7,000 to $8,000 from here, while funding rates are negative, essentially shorts are going to be paying to hold those positions, and they're probably underwater already over the last 2 weeks, and probably they're going to start letting go of those positions, and that will add fuel to the fire to get us to the upside. Okay, so we covered those underlying market dynamics, and let's jump right into some Bitcoin price action. And I'm going to make this video a little shorter today. It is a weekend. I've got a ton of work to do after this is done, so let's jump right into this on a 4-hour. And what do we say? Confirmed bear trap. That was this right here. We made our first lower low on the 4-hour, but let us show you again. How do we confirm that? So we had the first closure down there, and then we got back above the 618 fib at 38,300. Call it 38,300. And that was our big indicator. And what do you know? We broke the range on that candle as well. And that was our bear trap confirmation. Bears go home. Bulls are in control. Okay. And we did hit our target right up there to 41,000. Actually overshot it by a bit here at 41,500 currently. And do I think things are going to stop here? No. As I said, typically that's your first sell. And then you get to move up to that 2618 fib, which is coming in right at 44,171. And so again, in general, I don't think things stop here. We could get a pullback. We could get a pullback down to 39,000 or just under, 40,000, somewhere around 39,300. That's totally okay. That's just retesting the breakout level. Basically confirming support at that level is very good. And I think that could happen over the weekend. Not saying it will, but, basically you want to retest this support. That would be the 4-hour time frame right there at 39,300. What else am I looking at here? Let's take a look at our other indicators. So BBBWP on the 4-hour is getting way up there, almost past 90%. Could we go a little higher? Yes. But that is, curling over, showing that we might start consolidating a bit before going higher. And let's take a look on the hourly, which I do like for general continuation because BBBWP is on the floor here. So getting a nice reset. And what happens there, volatility is about to expand. Typically, you'll see volatility expand in the direction of the trend. And what's going on here? We've got higher highs and a higher low being put in place right now. But again, we can come back and touch that green 55, test that. I'd look at that as a major buying opportunity on the hourly time frame. And we did get that golden cross right there. The yellow 21 crossed the green 55. And so just to do a little basic, TA 101 here, what are these lines here? These are exponential moving averages. So they're going to have exponentially more power than simple moving averages, needless to say. That is our 9 exponential. That's our 21 exponential moving average, a 55-day exponential moving average, and a 200. So those are the ones that I'm looking at right now. Okay. So, and what else did I want to talk about? January 12th. Oh yeah. So what else do we use is this guy right here. It's called the RSI, which is the Relative Strength Index. And this is how you identify bullish and bearish divergence. And you can have hidden bearish divergence and hidden bullish divergence in the context of an uptrend or a downtrend. But what I did want to point out here is on the daily. So what is hidden bearish divergence? So if you're making lower highs, well, the RSI is making higher highs. That is going to be identified as bearish divergence. And if Bitcoin cannot get back above this January 12th high, we will have hidden bearish divergence present on the daily time frame. So be well aware of that, just in case you're looking for a pullback or maybe a short-term profit-taking area. what else I want to bring up? And then even if you look at it on a 4-hour, yeah, that is going to be present. If we can't get the 4-hour back above 43,300 here, as you can see, that is a lower high, and this is higher highs in RSI, and you got 1, 2, 3 drives, it looks like, going there. So I really wouldn't mind Bitcoin coming back down somewhere around, you know, 40,000 bucks, or even yeah, somewhere around 40,000 or just under 40,000 for a little kind of reset. Okay. And then what else I want to talk about are 5-day Stokes. And again, these are crossing up, you know, from a very, very low level. And we did say 5-day Stokes crossing up. That was a big key, is why we're looking for some upside just over the past week. You also have your daily Stokes, which are pointing way, way up. And they were going to cross down with any kind of a closure back below 36,200, but it held. And now we're moving onwards and upwards. And daily Stokes will remain to the upside as long as Bitcoin is closing above 37,500. But back to the 5-day Stokes, and I'll pull up our BLX chart here because it has the longest price history on Bitcoin. And we've been talking about this signal for the past few weeks. Keep in mind, we were saying, hey, if this does cross, okay, then it did cross. And we're getting that cross up and some follow through at the moment. And we're saying, look, you know, we're expecting an upside bounce. Keep in mind, with a 5-day signal, they typically take 5 to 15 days to play out. Can even take as long as 30 days. Some people get mad if it doesn't play out immediately. Well, that's okay, right? They just need to understand, look, this is a 5-day. It's a slower time frame. It's not an hourly chart, okay? So it takes some time to work itself out. Anyways, why am I bringing this up? Well, this 5-day Stokes have only gotten down to this level 4 times in Bitcoin's history. And 3 out of 4 times it has produced a macro cycle low. And we can go look back at that. And, you know, keep in mind these signals, right? So I'm going to pull it up, right? So we got December 12th, 2018. That was back here. And I'm not going to do this super, super detailed here, but December 12th, 2018, where is that going to be? Oh, that's going to be somewhere right there. November, right there. So what did Bitcoin do from this level to the next high? Right? That was a 400% gainer. And we can see that in the Stokes, they were down here, down at that, you know, call it 8 in the 8 percentile region. When was the next one before that? January 6th. January 6th. Come on. January 6th, 2015. I'm going to go way back in time here. January 6th, 2015. You can see, was that right there? No. Right here. Call it January 16th. January 6th. January 11th. Yeah. Yep. Right there. See the cross right there? That was the 5-day cross. And what you'll notice, it, you know, Bitcoin basically took quite some time, a few months trading sideways before we really got the move going. But even then, you know, the first move, that's a 200% gainer. Over time, what happened? Well, you can see. I mean, it was an astronomical gainer. If only we all bought some Bitcoin back in 2015, right? We would be all laughing to the bank. We'd be rolling to the bank. But okay, let's go on to October 3rd, 2014, which wasn't too far behind that one. October 3rd, 2014. Is that it? Is that it? Oh, there it is. There it is. So from this point to that point, that was a 56% gainer over the next few months. And notice that happened kind of immediately. We came up to the green 55 and got rejected, right? And that is kind of the bear trap scenario that we are going to be talking about not too long from here. And then, so that was a 56% gainer. And then the last time that it happened was October 18, 2011. And that is going to be right back here. Wow. Somewhere in here. October 18, 2011. Somewhere right here. Boom. That's it. And I mean, the initial gain, you know, that's 300%. But over time, what happened? I mean, if you would have bought that cross right here at Bitcoin at $2, and I don't even know where the next high is, but I imagine that is way up here at 268 bucks. Not a bad move. So when I am looking at this now, and I'm getting that 5-day cross, just like we've been talking about for a few weeks. If you've been on our channel, we've been looking at this cross saying, hey, if we get a cross down from this low of a region, it's going to be good for a bit of a bounce, okay? So what else have we been doing and talking about, very importantly, on this channel, on this wonderful channel, the Bitcoin Advisors channel? We've been talking about this, right? And it's the potential. We've been drawing out this potential bear trap scenario, right? Or sorry, bull trap. Bull trap. Bulls get trapped on a bull trap, and bears get trapped on a bear trap. Anyways, so on a weekly time frame, we have got our first lower low, and if we put in a lower high on the weekly time frame, then that will be yet again our that'll be yet again a signal that, you know, we're going to be in for like a bit of a crypto winter, right? Which could last, you know, 6, 12 months, 18 months, something like that. But how have we been doing that, right? What we've been doing is, you know, you go wick to wick. And I'm going to actually change up a little bit of what we've been talking about. But so wick to wick in a more volatile market, in a bull trap scenario, bull traps come somewhere between the 0.5 and the 618 fib. So I would say this, if Bitcoin does something like this, we bounce up here to the 618, and then we come back down and we break back below. So that's, you know, bull trap somewhere between 50,000 and 55,000. Okay. If we show any kind of a weakness around 50 to 52,000, 55,000, and then we come back down below the 382 and we get a closure back below there, that'll be confirmation of that bull trap scenario. Very, very likely, I believe Bitcoin will come back down and test that $29,000 to $30,000 low, and then probably does something like this. This is probably not going to break it on the first pass, but we probably come down and then boom, another lower high, and then, you know, maybe after 3 to 6 months or a year, we come back and tag this CME gap here, which is somewhere between 24 and 25,000 right there. So that is just a potential scenario that we want to keep our eyes on. We don't want to get trapped in the bull trap, okay? What else did I want to point out on the CME chart on the weekly time frame? Because we did have a weekly closure on Friday last week, and we do have a slight drive of hidden bullish divergence. And what is that? Hidden bullish divergence is in an uptrend. No, I think they're calling this phantom divergence, whatever it is. Price is making higher lows, RSI is making lower lows. So what does that mean exactly? Price is making higher lows, RSI is making lower lows. Let me show you. Let's see if I can get it out here. Price is making higher lows right here, and RSI is making lower lows. Yep. So what you can see here is between this point and this point, we've got a higher low in price action, and it's confirmed. And again, we front ran this signal as soon as we got a tick above this, and we're expecting a move somewhere up towards the 9 exponential, coming in at 44,000 right now. And so we got slightly higher lows on price, but yet we've got slightly lower lows in RSI, right? So this point and this point is low. And that would be known as hidden bullish divergence, or phantom, because that's only in the context of a downtrend. Price is making, yeah. That's right. So I look forward to bringing out the new like training course videos where we go over all the different things, candlestick formations, support and resistance, the RSI, and then a little trading strategy. It's going to be coming, so I hope you guys stay tuned and keep watching. And I just had a long conversation with somebody this morning about technical analysis, and I just basically said, look, I'm a nerd. This is what I like to do. I'm here on a Saturday doing this. Why? Because, well, I like to make money. And I found that trading Bitcoin is pretty fun, and it's pretty easy to do. So back on to what we want to talk about on the daily. And we did talk about pretty much everything I wanted to talk about. For a little bit of a shorter video, I said, yeah, now here we are 21 minutes into this video, and I am still talking. So I would, again, expect that hidden bullish divergence to play out, give us the move up to the 9 at 43 to 44,000. If we can get a daily closure back above that level, and more importantly on spot price action, I would say, short-term stop at 46 at that 200 exponential right there, but I would look for general continuation up to the 50 to 51.5, or call it 51.8 region right there. And yeah, we got 3 points on a trend line. That makes a trend, and hopefully that's what we get. And yeah, that's it. What else? We got the 2-day here. So if the 2-day wants to close today in 3 hours, anywhere above that yellow 21, yeah, I'm going to look for that move to get played out up to 44,000. Okay, and that's wrapping it up for today. Wishing you all the best and a blessed weekend. And don't forget, like and subscribe. We're going to be giving away a free Oculus Quest 2 at the end of this month. I hope you guys enjoyed today. Take care.